Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video, we're going to be going over the loss I took. 1% loss. We were trading NASDAQ, and yeah, 9:49 p.m. 7th of March. So this was Thursday. Just after I made the 4.8% to get my account back to break even. I took a 1% loss, which is fine. Let's get into the charts. So this is what I had marked up on Thursday. I didn't have that. I had this range, the 9:30 to 12 or noon. Then I had this range, the 12 till 1:30. And what I'm looking for is a break above the high or break above the low. I don't care which one it is. I'm looking for a break above, below, and then I'm looking for a reaction and then my entry pattern, which I'm gonna go into in a future video. And it all has to happen between the 2 and 3 p.m. time window. And this is US time, 2 to 3 p.m. But let's go back to Cairo. Let me just make sure it's Cairo. Yeah, I think it's Cairo time. And let's look at the trade I took. So 9:49 p.m. See, there is that. $9.49. Yeah. So I was selling here. Oh, this one. Took a short position here. As you can see, opening 18,325. I think no, it won't. It was at the low of this candle, and I will look at the stop. My stop loss was $325, $334. So I actually entered way down, much lower. So I probably entered here. Yeah, I entered there, and my stop was 10. Let me think. Yeah, 10 points, 10 pips. My stop was 10. I got stopped out, so that means I must have entered lower. That doesn't make sense. Okay, I'll just look at the data on FundingPips. But that's the entry I took. I remember my stop was above this high. So I remember entering inside this candle. Stop was above this high. And my target was the low of this range. That is my initial target. 1 to 15 R. Got stopped out because my stop was much too small. And yeah, so let's go through it, the whole process. So I waited for the high to be broken, which was broken. Let's just make that red. No, red. I want red. That's not red. It looks orange. Okay, it is red. Just make it thicker. Thick. So I wanted the high of that range to be taken out, which it did there. And now I'm looking for a reason for the market to show us that it's going short, that it's going lower. So we've got this high being made, this swing high, and now we've got this swing low. This was the previous swing low before the swing high was made. We have a purge of that. Just gonna move this line away. Let's make it thinner. So we have this low being taken out, and we've got small fair value gap being made inside here. That on its own, if you study enough, you'll see that this pattern on its own is really powerful. So it's high being made, the previous swing low, and then break of the swing low. I think that's break of structure. I don't even know what the stuff is called anymore. It's like, okay, it works. I don't care what it's called. And now we've got a fair value gap up. Now to me, I'm immediately looking at this, and if it goes higher from this, I don't want to take a trade. I still haven't looked for entry yet. I'm just looking for the market to give me a reason to go lower. Okay, so we've got this fair value gap up, and now we see this fair value gap is being broken, as well as this low. So we've got this fair value gap, the low of that candle is being taken out, as well as this low. Now this high is now, to me, this high is important. This swing low is important. And then you're looking for to either retrace back up to this level and then have a move down, or looking for fair value gaps above, like here, that it could retrace back into. We're still not looking for entry, we're still looking for confirmation. So this is all my confirmation stages. And now this is the entry that I'll be looking for. I'll be looking for fair value gap up. So a busy green fair value gap with a swing high, sorry, swing low that stops inside the fair value gap. And now I'm looking, that swing low to me is now important. I'm taking that swing low, I'm extending it out. Can make this one black. And now I'm looking for that swing low to be taken out by a fair value gap. Doesn't matter what part of the fair value gap, I'm just looking at that swing low to be taken out by a fair value gap. And this is my entry. I'd wait for the market to come back and enter a short at the low of this candle. So right there. And my target's already been set. Since we took out the liquidity high of that range, I'll be targeting the liquidity low. Standard 12 points. 1 to 5 hour trade. That's what it is. Now I missed this initial one just because I didn't feel like this was enough. So I just waited further and it gave me the exact same pattern, even higher up. So we've got this fair value gap up. Wait, I'm marking the wrong area. Got this fair value gap up. Got swing point. I'm gonna make this one red again. And we've got other side. Make that side black. No man. the low of the candle that made the fair value gap. First candle, taking a short from this low. Obviously when it retraces back into it, 12-point stop. 100, no, 120. Target again, the law of the liquidity. Let me raise this one. 1 to 5.3. But because I tried to be fancy and I saw this pattern, like when I entered this one, I'd seen this one and I thought this high was now super important and it's probably not going to take that high out, and it just wicked through the highs. Yeah, I was actually quite bleak. It wicks through the highs and then takes me out the trade and continues super heavy in my direction. So yeah, that is my 1% loss. So 1% was here. My initial target was just these lows first, and then after these lows had been taken out or could be taken out, I'll move my stop to break even and then look for a second position to add to. I hope you guys enjoyed that. Yeah, that's my 1% loss. Cheers.